Look forward to hearing the team discuss the need for a delay. Why was this decided late Friday? If the team knew they needed more time to get interest from various VC funds, why was this BFP decided on a Friday night and not earlier?
So the long and the short of it is there's a lot of optimization happening in real time at the moment. And substantively, the amount of interest in some sort of negotiated deal was non-existent effectively, or relative, not substantively existent on Wednesday, and by Friday morning was much more substantive. And so then the question became, over the course of Friday during the day, whether or not it was substantive enough that it was worthwhile potentially pushing back the barn raise back. And the long and the short of it is there was enough interest that it seemed like, it would be prudent to give the DAO a little bit more time to negotiate, if that makes sense. Given that this was a self-imposed deadline, the nice thing about self-imposed deadlines is, you can flex them. And so the option was presented whether or not it was worthwhile to push it back to try to, potentially field more incoming offers or calls and interest to maximize the chance that Beanstalk is able to recover as much of the 77 million as possible.
Okay. Why did the 8.6 million stock wallet vote immediately after the BFP was proposed? Is this Publius?
That is specifically not Publius, and I couldn't tell you why they voted immediately. You're paying much closer attention to that than I am, Harry. But no, that is not us.
Okay. Delaying the raise after communicating to the broader market and major media outlets shows weakness. Why not negotiate with this syndicate during the bidding process, and if they offer a good deal, then present it to the DAO?
I don't necessarily agree that it does show weakness, but I appreciate that opinion. The short answer is there's a million ways to do this, and felt that it's not one syndicate per se. There's a lot of different offers that are and conversations being had, and long story short, it just didn't make sense to rush it from our perspective. So there's a lot of different people having a lot of different conversations, not just us per se. And the general consensus was that there was a lot of benefit in having some extra time here.
Can you speak to the possibility? Something that was, I think, that Harry was discussing in general was if the barn raise was to go off on Monday, could you still be negotiating the same sort of deal side by side with that, or would it sort of preclude the possibility of getting big investment? Like, can you talk a little bit about the potential feasibility
theory,
of that?
You could do both, but in practice, that's that's a lot harder to do in practice. Certainly the right way, where now you have people participating in the barn raise. They have an expectation that they're getting one thing, and then the DAO is going to backtrack and say, actually, never mind, we're not going to honor this bidding process. Like, that's, you probably don't want the DAO to, and the contract to start accepting bids until the DAO is prepared to offer it or honor it.
So yeah, if someone came in at X% weather and said that they wanted, theoretically, say they wanted, half of it or whatever they wanted, then if you had other people in line who were queued up, you'd have to sort of bump them and change their terms, which you've already kind of.
Correct. You can't do that. So, you can ultimately maybe negotiate some sort of OTC deal, and then assuming the terms that are negotiated with the DAO allow for the rest to be raised via a barn raised mechanism, there's no reason why ultimately you can't do both, but you certainly can't play them against one another simultaneously. That would be not possible.
Okay. Getting back to Harry's questions, just working through them one by one. Does it make sense to stop the momentum that we've been building?
I don't think there's going to be any stop of momentum, my friend. That's my opinion, but, we'll see in practice.
Okay, the next question is basically is the syndicate, or whoever the offers would come from, are they willing to give the DAO a letter of intent or a soft commitment subject to diligence completion?
Well, I think assuming that the capital was there, you know, the confirmation or the way to have the DAO agree to facilitating the transaction, that kind of runs both ways, right? There's one question we've been asked regularly is, well, how do we actually make sure the DAO honors this, right? So I think that will need to be some sort of formal agreement, and in practice, this is sort of to some extent uncharted territory, but I'm sure we'll be able to get that well documented. In the instance that ends up being the route that this goes.
And lastly, Publi went into this saying that we didn't need the full 77 million and that we could essentially start from $0. Why are we delaying to get even more commitments all of a sudden?
Well, there's a couple things. Not getting the full 77 million is not a problem in the grand scheme of things, but it's far from optimal. And in a perfect world, Beanstalk is able to recapitalize the full amount. So given that that's kind of at the end of the day, the goal here is to make sure that Beanstalk can raise as much of the $77 million as there is demand for. If time is the main issue here, and time is something that is somewhat flexible, right? That's not a limited resource at the moment, unless you feel like at the margin of a week that's going to significantly compromise momentum. Think that it's a pretty reasonable trade-off for the DAO to have more time to field offers and such.
Okay. Bean money, straight between the eyes. What are the offers?
So there's a lot of different terms and stuff being thrown around there, and out there, if you will. One structure that seems to have a lot of different interest, and I'll use this as an example of how to potentially alter the structure of the barn raise, or very similar economics, such that you can get then larger participation in a single round, in a single tranche, effectively. So the concept would be Beanstalk would offer for the full 77 million some sort of fixed weather across the full 77 million. Call it like 500%, which is slightly more than the max 472 under the current barn raise, but is a similar rate of return. And the concept is that under this idea, instead of issuing pods, which are first in, first out, every participant in the round would receive some fungible token, which is not stock, but just a fungible token that would entitle them to their pro rata portion of the third of Bean Mints being allocated to paying off this debt effectively. And so similarly, there would be something like 462 million pods issued under this 500% weather, I believe. And so you say a third of it goes to the system. It's very similar math to the barn raise math as it currently stands. But the idea is if you can get a significant amount of capital in around at the same terms, and minimize the risk that Beanstalk is unable to recapitalize, that would be the way to potentially structure. Now, the interest rate itself may be higher, may be lower, but I think if this were to go the way of a round, some sort of negotiated round across an entire class of participants, that would probably be that would likely be the structure, or something like that.
Okay. Is a week long enough?
Unclear, but I don't think it would be reasonable to push this back any more than that at the moment, given that, it's unclear how substantive this is. If it ends up being that, in a couple days, the only last thing to do is figure out the legal specifications of the exchange, that then it's like, well, maybe you need another week to do that, but who knows? For the time being, I think, this just allows everyone to have a little bit more flexibility and optionality, as opposed to being in a true race against time before Monday.
From James Bean, wouldn't the barn raise and VC conversation create competition?
100%, and think that there is competition. Like, this is the competition, right? It's just a question of you can't do them simultaneously. But yes.
Okay, from Harry Smith, isn't the whole point of this raise to get the best deal possible?
Yes, but that seems like a little bit of a rhetorical question, so not exactly sure where he wanted us to go with that one.
Think, and I'm inferring here, Harry, but I think he's saying that if we're agreeing to like a higher, like it's sort of like we're balancing certainty versus doing the barn raise and hoping to drive the weather down as much as possible. I suppose. Okay, from Beandolf. Where is the latest and most up-to-date barn raise contract code? Can we make sure that the code is farmer around? Can we make sure so that the technical is passed around so that the technical folks in the community can read it over?
I think Silo Chat shared the link in response.
Okay, great. Okay, from James Bean, how much can you share about the progresses with VCs so far? If we extend a week and the VC is still doing due diligence after the next week?
So the short answer is it's not a single entity. So the idea that everyone will still be in, it's just, that just doesn't seem realistic, and the progress, it's very hard to share honestly, because it's like there's, people are throwing out numbers and stuff like that, but don't want to misrepresent anything until we have more of a sense. But it's not $0. People are throwing out 7 and 8 figure offers effectively. So, and that's multiple. There has been one paper offer, but it was not really in the context of this to respond to Bean Money. There was one written out offer, but it wasn't, it was kind of, it had a lot of details and, nonsense associated with it. So it's like not any written commitment to the terms we're talking about under this idea.
Okay, Benji's asking 100% weather for 77 million soil. He considers that a horrible deal and would create a high chance of the system failing in the long run. Can you speak a little bit to the health of the system at that kind of weather for that kind of $77 million number?
Sure. I mean, this is ultimately subjective, and some people may decide that if the system issues another 462 million pods, that it's no longer attractive to lend to the system. But in practice, if you look at how the beans are expected to be distributed, according to the 1/3, 1/3, 1/3 proposal, the idea is 462 times 3 is like 1.5 billion. if you include the 108 million currently in the supply. So at the end of the time that the people lending to the protocol in this round would be fully paid back, that would be effectively the end of, that would be the same or a similar valuation to what people were lending to Beanstalk at prior to the attack. So it was 700 million pods times 2, which is 1.4 billion plus 100 million gets you to 1.5 billion still. So now the idea is there's like 700 million pods. Currently, we're saying minus 462 because that already gets us to 1.5 billion. There's about 250 million pods left. And 250 million times 2, because again, that then we'd be back to the 50-50 cut. You're now talking about a $2 billion valuation on the debt side. So after all this mishegas, you went from 1.5 billion to 2 billion. I mean, to me, that's the cost of doing business, So ultimately, if the protocol can marginally increase its valuation on the debt side by 33% after all of this, think that's a pretty good deal. But obviously, it's subjective.
Do we have an idea of what the pod rate would look like? Or can you talk us through that a little bit?
Can you repeat that?
What the pod rate would look like? I know the pod rate before all this was really dropping.
Well, the pod rate would be 462 plus, call it just under 700. So that gets you to 115. So you'd be at like just over 1,000%, maybe like 1,100%. So
it wouldn't
about
be
where the pod rate was, a week prior to the attack. If you will.
How likely is the whole allocation to be taken by VCs?
It's. I think if the Dow were to, half maybe, but in theory, there's no reason why this wouldn't be taken 100% if it. So I think frankly we're the ones really setting the time frames here, and the problem was that the Monday time frame, prior to Monday, was just too steep. But a lot of people are spending a lot of time trying to figure out whether they want to do this or not at the moment. So it's more just, it's not about time. Everyone realizes this is happening in real time.
VC raises, then are the 300K operating costs necessary?
Well, the I don't understand the question. But I don't understand.
I think they're. I would lean towards a yes, Pugan. That there's still a lot of work that this still has to be done. We can't just close up shop and hand it over to a VC.
Are they're asking about the budget?
I think so, yeah.
Well, ultimately, the idea is there's a lot of shit that needs to get done, right? And people that need to get paid, in particular service providers. So the hope is to kind of keep everything moving full steam ahead while the money is being raised. That was my understanding of the proposal.
If no barn raise, then what will happen to the special edition BNFTs?
That is a good question. I'm sure I'm sure something fun will happen around them, but don't know.
just checking back in the room. We have a hand. IPO and chill.
Yo.
Yeah, we can hear you.
Dublin, can you hear me?
Yeah, I can now.
What's up, guys? Thanks for doing this. Just a couple of questions. I mean, nothing we haven't seen already in the chat, but to just get to the brass tacks a little bit, I think it's obviously substantial at this point, or substantive, right? Or else there wouldn't have been a proposal to delay this a week at the 25th hour. So I think like anything you can share, it doesn't have to be names. If that, like, at this point, it's unclear like what you think is even sensitive to share, or why you think you can't share anything. But like, what exactly is it that is going on, right? Like how many people are you talking to? What are, if anything, are there new terms that would affect the economics, or this like one third thing? Like what exactly is it that is being discussed?
I mean, it's so hard to give you a good answer, IPO, because everything is being discussed. People like we've probably over the past 2 weeks spoken with 4 dozen firms, and a decent amount of them, are seriously interested, and a lot of them have expressed, particularly with regards to the barn raise, like how can we get our fund to participate in this, really, like how? And it was a serious question, and the short answer is those that have been presented with, well, what about this round? And again, as we said, genuinely, this thing really just came into shape over the previous 24 hours or so prior to the proposal, such that it, like, any real shape. And now that similar shape, and it's the shape we laid out before, of like the 500% weather, some sort of fungible token that receives a third of bean mints. Thus far, that idea, since it was kind of distributed yesterday, has received a lot of interest. So it's the only thing we don't want to do is be misleading and say, oh, there's definitely interest, people are definitely in. Like, no, it's, until there's pen to paper, who the fuck knows. But the short answer is the sharks are circling, and it would be in Beanstalk's best interest to try to see what happens, basically, as opposed to rushing forward with the barn race. That would just be passing up potentially interesting opportunities.
How do you think it would, I guess 2 more questions. One, if we were to launch the barn raise as intended, wouldn't it still be possible to have these conversations? And then in the event that there's someone that wants to do the whole thing, or a syndicate that wants to do the whole thing, we could vote on it then, right? Because people would still be able to be refunded for their bids, wouldn't they?
I think you're gonna start to eat your own tail there. Like, you can't be negotiating against yourself and have people that might want to be in the barn raise be hesitant because they now want to negotiate OTC. It's like, at some point that's not going to be an optimal way for Beanstalk to negotiate.
Okay, so then lastly, moving forward, look, it looks like this thing, who knows how many people are going to vote, but right now it looks like this is going to pass. Can you give some color, like specific color, on how you see this week playing out? Like what's on tap for, between tomorrow and I guess next Monday? Like what exactly is going to be happening?
More of the same, it's like the past, I guess now it's almost 2 weeks since the attack. It's been like, nonstop trying to figure out how to maximize the chances of Beanstalk succeeding going forward. So, long story short, there's a lot of calls that need to happen to try to wrangle some bulls here effectively. It's more art than science to some extent.
All right. Well, I hope you have your cowboy hat and your lasso. I guess the only thing I'll mention is if this is to pass and we're on the sidelines again for a week, I think it would behoove the powers that be at this point to just be as transparent as possible. And, you can caveat whatever it is that you want, right? I think at this point, it's pretty obvious there is interest. You don't need to give any certainties if there aren't any. And, from that perspective, I think that would be very, very helpful for everyone involved.
Well, all I can say is, sir, we're here to answer any questions you have.
Many thanks, sirs. Dumpling, I'll give the floor back to you.
Okay, next IPO. All right. Chat. If from Cool Beans, if 100% through VC, it would be better if original ETH/Bean pool and Bean/3 curve were restored, rather than 100% proceeds to Bean/3 curve. I know that the amount to be raised would be adjusted slightly with 100% VC, but with 100% VC, it would be easier.
The short answer is I don't necessarily think that the source of the capital affects that calculus. Or at least to me, it doesn't seem to. But, those are questions that will probably get answered after the barn raise,
Okay, from Lord of Bones, wouldn't we just see delays every week if nothing happens? Why not push it till mid-May, June, etc.? I guess he's getting to how far are we willing to go if we don't have anything firm.
I love a good argument ad infinitum, but I think we got to keep playing it in real time here together, and don't think that pushing it back any further than a week has any advantage to it at the moment.
Okay, from Guilfoyle, why aren't they interested in participating in the barn raise? Are they concerned the weather is too low? They can put in their 76 million at 450% weather and see how much they get.
I think that it's not a question of not interested in the barn raise. It's a question of simplicity, frankly. Like, that's it. So, there's a lot of interest in the barn raise as well. And I would just make the comment that even if over the next week no private deal ends up getting done, that means that there's a lot of funds that will have spent a lot more time, energy, and effort thinking about Beanstalk and then may end up participating in the barn raise anyway. So there's a lot of focus on Beanstalk at the moment, and it should continue to be leveraged.
How much is, if you were to say, how much of this week is the reasoning is to have fresh calls that haven't been had yet, you haven't had the time to have yet, and how much is to kind of continue to court, existing relationships and to further existing.
Say a healthy mix of both. There's been enough interest from the conversations that are being had that it's substantive, and then there's enough conversations that have not been had yet that, in theory, the whole thing could get done. It's if this weren't possible, if this weren't real, then there'd just be no reason to not go ahead with the barn raise. It's that there's a real chance that this, there's real interest here to potentially fill all or the vast majority of this.
From Hypershark, was the idea to delay the barn raise internal, or was it specifically requested by potential VCs, angel investors?
Well, no one requested and said we can't get this done by Monday, but it was very clear that there were a lot of people that couldn't get it done by Monday, if that makes sense. So it's one of those questions of just reading the room.
Will the Publii families be participating in the barn raise?
Yes.
Okay, I'm just looking for any ones that I missed. Here we go. From SSPDT, I'm more worried about the long-term protocol success than my immediate bags. Has it always been possible for the protocol to negotiate special deals for investment capital, or is new code being deployed to allow this?
Well, as of now, whether it's the barn raise or this fungible token, there's going to need to be slight changes to how Beanstalk operates, obviously, because it's autonomous. So, in order to get it to change its rules, there does need to be a change in the code. But substantively, the distribution of bean mints is currently done in a way where it's pretty easy to implement this change.
Can you elaborate on how these fungible tokens would be different from pods?
Well, the fungible tokens would receive a portion of bean mints, sort of like stock, but they would only receive mints for a period of time, effectively. So they would mimic owning pods in a pro rata portion across the whole barn raised pod line, effectively.
Are these crypto native VCs funds?
Yes and no. There's a really diverse set of interest here in Beanstalk. When now that it's being covered in the Wall Street Journal and stuff, there's a lot of different places that people are, we're receiving inquiries from generally.
VCs expressed concern over protocol security?
Yes, of course. And the short answer is, I think everyone is, from what we can tell, generally comfortable with the move to a community-run multisig for the time being. And, everyone still is a long-term believer in on-chain decentralized governance. But obviously, as we've said before, even Vitalik was participating in the discussion on Twitter saying that token-based governance doesn't work. So don't think anyone's really in a rush to re-implement on-chain governance until everyone feels really confident in it.
From North, is there a plan to have coordinated promotion as a condition of a finalized deal?
You went in and out there. It's hard to tell.
Oh, sorry.
Oh, I see the question now. Is there a plan to have coordinated promotion as a condition? No, don't think we need any coordinated promotion, frankly. Like, what more promotion do you need than being on the front page of the Wall Street Journal?
Any of these VCs indicated a desire to continue to invest outside of the 77 million?
Unclear, but the main focus is right now on the recapitalization.
What special terms are VC getting that are not available to the general community? I want to know what we're paying for their participation.
Well, there wouldn't be any special terms. There would be the separate, it would be in lieu of the barn raise. This idea, this fungible token that would receive, a third of bean mints pro rata for, like the next 1.5 billion bean mints or around there, based on the weather from the round. So 1.35 billion or something like that. But there's no additional special terms under this idea.
Okay, from Wonton, interesting question. Would the VC want to create a secondary market for the fungible token?
I'm sure they would. I'm sure they would.
Seeing what I missed here. Are there risks for a quick dump if there's only a few big funds in the new pod line? There are problems. having too much capital concentration? Is any thought being given to this?
Definitely. And don't think it would make sense to fill this with one fund or even two funds or three. But the idea is, as soon as you get to like 5 participants or more, given that there's going to be a pro rata pod distribution over time, the idea that they're all going to dump at the same time is highly unlikely unless they were trying to coordinate to, be malicious to Beanstalk, and that just doesn't seem realistic.
There are offers from VCs totaling 77 million at the new barn raise. Would community members have any chance to participate in the new system with the same terms?
Hopefully, I think it's just unclear how that will work, particularly if there's excess demand for the whole round. We could try to, make a cutout for the community or something like that to participate at the same terms as well, but would have to think about that one. Obviously, that would be preferred in theory.
Can the VCs be tied into a vesting period?
Well, I think in practice there is sort of a vesting period, right? Because they don't the tokens that they're receiving, they're not worth anything, but what they are worth is, they receive a portion of new bean mints over time, and so the vesting is, the time at which it takes the beans to be minted effectively, and then that would obviously coincide with the vesting period on the silo side of things that coincides with the current structure of the barn raise, for example.
Okay, we got a hand here. Zachary Dash. Yep.
Hey guys, can you hear me?
Yes, I can hear you.
Hey, yeah, just for quick context, I'm coming into this as somebody who has not ever put in any capital to Beanstalk, and was pretty excited for the barn raise as well. So I think one comment that I think I heard, so I'm trying to unpack it, was that there would be a potential fungible token here. And one of the decisions or one of the thoughts was that this would make it easier for big potential VCs to participate, or simpler, maybe was the word that was used. Sorry, I'm walking upstairs right now. I'm a little out of breath. So my question was, I think as somebody who's never put any money in, that's also the biggest friction point for me, was just wrapping my head around this. And from the beginning, just a fungible token kind of swap would have been easier to participate. And I also feel that a lot, if the raise was ever not met, I feel like the only reason would be kind of what we're talking about now, which is simplicity and that friction of kind of teaching yourself. So I was curious, it sounds like this fungible token is an easier way to do this, or a simpler way, but I'm curious why it couldn't be offered to the general public and only kind of certain individuals. Could it be a simpler way to offer it towards everybody? And I know there's probably legal implications here. You're probably talking to maybe accredited investors. So I just wanted to see if I'm misinterpreting that.
That's a fabulous question. In practice, the nature of raising capital from an open market, like the barn raise, is fundamentally different than the idea of raising capital privately, where publicly the people who are participating are all competing against one another. And in particular, one of the things that Beanstalk has as a key innovation compared to previous credit-based stablecoins is that its debt is not fungible. And in an open market, having non-fungible debt is essential to creating an efficient market for that debt in practice. Or at least thus far, Beanstalk's first in, first out debt mechanism has been the only mechanism in the open market to create an efficient market for lending. And so if this were to be an open market for lending again, think you'd still have to have the first in, first out debt schedule. Now, the nature of the private sale is that everyone wants the same terms. And so if it's the same terms, then you need a solution to the first in, first out structure temporarily, because it's too hard to offer the same terms for everyone if pods are first in, first out. That, those are 2 points that are contradictory. Does that make sense?
Slightly. I think just I've only been researching a few weeks now, so I think I need to understand better the first in, first out system. But at a high level, if this were done by the public, you feel like it would be, if this were offered to the public, what if you could maybe give me the output implication of the in first in, first out? What would be the output of
It's simple.
the
It's
down?
if at any given time you think it's a good time to lend to the protocol, you're incentivized to do so immediately. Because otherwise, someone else is going to lend to the protocol first and get in front of you in the line, and that will change your return profile. Whereas if there's a fungible debt token, now the time preference for you'd much rather wait to see what other people do first. Does that make sense?
Slightly. At a high level, I think you've kind of the fact that you've thought through this, I think, makes me feel a little better. I just wanted to reiterate, a fungible token would, I think, also take away so much friction from a lot of people like myself that I'm going through all the weeds of the videos and the research, and if it was a straightforward thing, I think it would I'm already hoping to participate if the barn raise still goes through. So I just mainly wanted to let that be known. And then I think my last question here, has there been any finalization of the if there is a raise, the token that would be used? I think the last ones I read were USDC or USDT.
No, nothing's been finalized.
Okay, cool. All right, thanks for talking through that. I think I'm just going to do some more research to understand the problem that you're talking about, and I'll see you guys around Discord.
Awesome, man. Thank you for your questions.
Okay. From Lord of Bones, can you offer more clarity on restart after barn raise? I've seen some reservations regarding entering the barn raise and not having certainty that the protocol will restart, or if so, when.
The long and the short of it is, our understanding is that upon completion of the barn raise, the DAO will vote on when to restart the protocol. So that would have to be a DAO vote. Now, it is worth noting that the vast majority of VC interest, they've expressed no rush in restarting the protocol, and it seems like they're much more inclined to wait until the completion of the Trail of Bits and Halborn audits. So in the instance where there was an OTC deal instead of the barn raise, then it would likely be part of that negotiation to restart upon completion of the two audits. But if it's the barn raise route, then our understanding is that the plan is for there to be a vote.
Okay. If the VCs are not getting special terms, why can't they just participate in the barn raise like everyone else?
Well, the point is that it wouldn't be there's no additional special terms in addition to the deal that would be negotiated. Now, the terms of the deal are not the terms of the barn raise, right? There's some differences. So in practice, what you define as a special term, I don't know. But the idea is, this would be one deal effectively.
Okay, let me know if I've missed any, guys. We got some hands. We'll bring Caesar up. How's it going, Caesar?
Hello, good friends. I got a question about, is the barn raise going to be immutable in the sense that can it be canceled halfway through or sometime after it starts if for some reason some VE comes along with it such a great offer that, or something along this nature? Like if it starts, is it definitely going to see the end of the barn raise?
I mean, from our perspective, it would probably be inappropriate for once the barn race to start for the DAO to like renege on the terms of the barn raise. So, that wouldn't seem to be appropriate. Now, is it possible? Between whenever the barn raise happens and when Beanstalk restarts, in theory, anything is possible. The DAO could say, "We're giving your money back. We don't want your money," but it just doesn't seem realistic.
Yeah, I guess because the barn raise is not actually connected to the contracts, right? So there's going to be...
It's actually a similar thing, right? Where the DAO is negotiating like terms and now it's just offering them. So whether it offers them to a group of, VCs or funds or whatever, or whether it offers it to the barn raise, it's the same concept, right?
Yes. Okay.
What I gathered from earlier is that's why you wouldn't want to do these two things at the same time. Like you wouldn't want to move forward on Monday, but then also keep conversations going, because what are you really talking about? If the only option for them is to participate in the barn raise, then then you can't offer them anything else. That was kind of the eating your own tail thing that Publius mentioned. Okay. We'll bring NPS up. Oh, NPS, you're muted.
Oh, can you hear me now? Sorry.
Yes, can hear you now.
Okay. So I understand the concept of issuing a fungible token for the debt, and that would be issues to the VCs. But at the same point, the community over here, they should also have a chance to participate. So what if we kind of finalize the term or whatever the terms of this fungible debt token would be, and kind of also offer those terms, and we can finalize that with the VCs and then offer that same terms or maybe even a little better terms and better in perspective of Beanstalk as a system to the community, because community should also have a chance to participate. I would personally like to put more money in there, but if it is only given to VCs, then I would not have a chance. And VCs can, based on that second point, right? So if more money is raised through the community, then the respective money which is left over can be returned back to the VCs, with like we always said, right? So wouldn't that be a fair system, so to make sure that community can also participate in the same fungible token?
Lots of different ways to do it, and think it will ultimately be up to the DAO to decide on things like that.
Okay. So, but I mean, what I would say is that keep in mind that there are participants in the community who would also like to participate.
Trust me, that is very clear, and this is right. The DAO is going to have to decide whether to just do it all in this one round, whether to do a split. If there's interest to fill the full 77, these are very good problems to have. So hopefully the DAO will have to decide on such matters.
Okay, makes sense.
Thanks, NPS.
Yep.
Okay, we'll bring up American Pharaoh, winner of the Triple Crown.
Hey, Dumpling. Hey, Pooplii. Can you guys hear me?
We can
Hello,
hear.
sir.
Hello. Happy Saturday. So I just had a question, actually less related to the private raise and more about setting the forward-looking weather. So I'm wondering if during the barn raise or through a private sale with VC, we negotiate a market rate at which people are willing to lend to the protocol that's lower than the current peg maintenance weather rate pre-exploit. would it make sense to bring down the forward-looking weather or sort of reset it to a rate that's more in line with what people are willing to sort of fund to the protocol at current market rates?
That's a fabulous question. And in theory, there's a good argument for both lowering it and not lowering it. Now, the reality is, if we go back to Beanstalk principles, Beanstalk doesn't really care what weather it's paying at the end of the pod line. The only thing that it cares about is that it is able to attract lenders. Now, if we look at some of the napkin math we were doing earlier, that this pushes the total valuation of Beanstalk from 1.5 billion to 2 billion, that would be the main data point that the market may require, particularly to get to the end of the pod line, whereas these new terms result in some sort of immediate yield, whether it's the barn race where there's a new front of the pod line, or these fungible tokens where there's yield almost immediately. The idea would be if instead now people need to go to the back of this pod line that's valuing Beanstalk at 2 billion instead of 1.5 billion, maybe this is such a strong showing that the market's willing to lend to Beanstalk at, much, much lower, or maybe not. And so the point is, given that the main principle is Beanstalk doesn't really care what price it's going to pay for soil once it's up and running, and you consider that there's not likely to be a lot of soil early on, assuming that the system scales or doesn't even need to scale at all, where there's going to be an excess or a shortage of beans in the pool. The idea that, the risk of over adjusting the weather and lowering it too much, such that whenever Beanstalk restarts, it's unable to attract lenders, that risk is, a risk it doesn't make sense for Beanstalk to take compared to the marginal cost of overpaying for soil at the end of the pod line, in our opinion.
That's a good point. I might just bring up the data point that we had sort of like the soil sniping bot and then immediately repricing of pods at the end of the pod line above the weather rate, right? So there was that sort of arbitrage. And so maybe it's just worth considering as we are getting more indicators that a lower weather rate could be a more appropriate lending rate and could be a more sustainable long-term lending rate. Perhaps there's like a Dutch auction mechanism or something like that we could do to potentially think about resetting the weather as we reboot the protocol. Just a thought.
Yeah, I think that the main concern is that in the early days, particularly immediately after restart, there may be desire to lend to Beanstalk at lower weathers, but that will change at some point, right? And the concept is, because of the nature of how the weather adjusts up and down, if you adjust down too quickly and then you don't allow for the protocol to adjust back up quickly enough, that becomes the problem. And then as soon as the protocol is able to adjust the weather up very quickly, then you start to lose the benefit of the first in, first out on the incentive structure, because now, well, if the weather's going to go up 50%, maybe I am comfortable waiting for someone else to lend in front of me, right? So the slow movement of the weather is very important. And while you could maybe make an argument for a one-time adjustment down, I think that the risks there are probably too high and the benefits are very minimal.
Well taken. Thank you.
Good luck in the race later, sir.
Okay, some people joining late who seem excited. That's great. Mike Jones. Sorry if this is already asked, but how are we vetting the long-term commitment from those outside funds? Is there the possibility of raising the full amount? Imagine there are multiple interested parties. So not all money is equal, and there might be more value for the long-term success of bean in money from those that will silo or even resow after the harvest versus those that are looking for a quick trade/flip.
Well, long story short, I think this is a very important question that Mike Jones is raising, and while in theory we're still at the place where beggars can't be choosers, if that changes, and there is a lot of interest, then maybe, yeah, it is possible to pick and choose the most long-term aligned capital. But as of now, that's not where Beanstalk is at.
Okay, from North. Motion seems especially important. Can we get the snapshot up for creator/additional campaigns for those who aren't reading the Wall Street Journal, etc.?
The long story short is, in theory, sure. There was some discussion with creator around the barn raise, but in theory, there's nothing wrong with that. In practice, a little harder to say.
Okay, we have a follow-up from Zachary. During the town hall, I asked the question if fungible tokens are an efficient and simplified way to get investment from VCs. Why aren't we using the same mechanism for the general public? The answer was along the lines of this would create a first in, first out problem. While researching into this concept, which I still haven't fully understood, I wanted to ask a quick follow-up. How is going through VCs prevent the first in, first out problem?
It's not about preventing it. It's just a question of, if the whole round is being negotiated, then there's no need to get people at the margin to act at any given time. So then you don't need to offer the first in, first out debt. And furthermore, it's impossible to offer first in, first out debt if everyone's in the same class.
Okay, from Alex. Looking awesome. Can we celebrate? Take that rhetorically. See if I've missed any other ones. JHG, existing investors be offered the same terms as any VC or new private investor, almost like a pro rata? I was excited to participate in the barn race.
It's a question of participation? Unclear. That's something the DAO will have to decide on.
Okay, gonna see if there are any hands.
There was one question, though, that was skipped. I don't remember where it was, about whether this was in perpetuity or not, whether these tokens would receive a third of mints in perpetuity. Absolutely not. That would be like a permanent tax on the system and would be horrible. But the idea would be for a fixed amount of mints to lock in that 500% return or something.
Okay, I'm looking for any other ones I missed. Okay, from censored user. So is there a VC who has actually expressed interest in filling the whole round? Or are we saying that it's a possibility and we don't know yet? We need more time to see it happen.
I think it's much more likely that a variety of different firms come in collectively to fill the whole round. It would not be desirable to have one party take the whole round.
Okay, I think with regards to the fungible token, there's a little bit of confusion. So I wonder if you could go through that again, Publius. I'm seeing from Bean Money, this would be more of a parallel silo than a parallel pod line.
Yeah, that's a great analysis, but I don't understand the question.
Well, I guess, so my question is just, could you go over the, could you explain that? Maybe could you explain that to me then, the idea of the parallel?
Stalk is in theory fungible and receives a portion of bean mints. So this is a token that is fungible and receives a portion of bean mints. So the parallel is that it's closer to Stalk than to pods. But because it's debt being issued by the protocol, it's a hybrid.
And there's a limit to it, right? It ends, as opposed to Stalk, will earn bean mints theoretically forever, right?
No, it would not earn bean mints forever, is the point.
Right, I'm saying that's the difference, but Stalk does.
Unless you burn it to withdraw.
Yes. From Caesar, was there any consideration of the victims getting favorable terms or even whitelisting early access to barn raise?
Not on this end.
What does Publius see as the downsides of the VC raise, if any, compared to the barn raise?
Well, I think the main one is that, the community may not get the opportunity to participate, and think there's a lot of interest from the community to do this, ourselves, and that's amazing. But net, hard to pass up the opportunity to get all of this higher quality, institutional style capital into Beanstalk. I think that would be a really incredible opportunity.
But would there be any voting rights given to the tokens?
No, it'd be much closer to debt is the idea.
Does the barn raise filling or not factor into restarting the protocol immediately versus pending audits?
Well, I think ultimately that's one of the reasons why the DAO vote on when to restart the protocol will happen after the barn raise, because a lot of people have raised that would affect their participation or how they would vote. So in theory, one would guess yes.
The beans that we had in silo going to be restored as part of the liquidity raise, or solely the LP totals comparable to our stock?
So under the barn raise plan, and in theory any plan, that for an OTC deal, it would be to restore all the beans as well. The beans would also, like the LP, be subject to the vesting schedule, but any Beanstalk assets would get restored.
Okay, Thunderburger says, perhaps a flexible VC that is willing to invest anywhere from 0 to 20 million, which is a very arbitrary number, and then we offer the barn raise to community members, and whatever is left, VC gets.
I mean, these are good problems to have. I don't know if we're going to have those problems, but we'll worry about them when we get there.
Beans asks, ultimately, who will decide which VC is to be chosen? It would be correct to assume that a selection of VC will not be presented to stockholders?
Yeah, that would probably be a good assumption. This question kind of presupposes that there's an excess of demand, and now there's people fighting over allocation. So, again, not sure that that's a reasonable thing to consider at the moment.
From Caesar, is there any estimate of an amount that VCs have committed?
Not not to share at the moment. No.
From Bean Bankman Refried. Hypothetically, if there was a group of retail investors that is willing to pool enough funds to get to a certain size, say 5 million, can we include them in the OTC VC round? Can Beanstalk facilitate a contract for those willing to commit funds immediately to get into this round? Asking because there seems to be a lot of retail interest.
Yeah, there's no reason why that wouldn't work. I think the concept is if the DAO is negotiating like bigger checks effectively, if people group together with and are able to form an entity or something, like yeah, certainly. There's no need for the capital to be, they're just VCs. It's more a question of if this is going to be an OTC negotiated deal, the check sizes just need to be much bigger than the barn raise.
Is there a minimum that you'd have in mind that people should shoot for? Is 5 million a good number? Is 1 million enough? Or is, what would be sort of, the lower end that is reasonable?
Probably 1 million, but I'm making that up. The higher, the better, ultimately. The less negotiating parties here, the better. So, but it's hard I don't have an answer, honestly.
Sure.
I see Alex saying, let's start a DAO to invest in the barn raise. Fuck yeah. How cool is that? That's a cool idea.
Seizing the beans of production. Oh, good. Okay, American Pharaoh is putting up a Twitter poll. Sweet. Okay, I'm going to check back on stage, see if there's any hands. Reminder that you can come up and ask your questions.
Pretty good stuff, huh?
Yeah. Shark saying we could do that right now with Juicebox.
Pretty good stuff.
Maybe we can get the full the full 77 on our own. Oh, we're kind of running out of questions here, guys. Anyone's typing one up, we can take 2 more and then probably wrap this thing up.
I think we're out of questions. Too much FaceTime, I guess.
Yep. Okay, guys. Well, this was great. Thanks for coming, and we'll see you guys all soon, and have a nice Saturday.
Hell yeah.